Hello, welcome to our weekly market review. We will look at global markets, the Turkish economy, technology, metals, and cryptocurrencies. Our goal is to quickly present the highlights amid a busy schedule. We are now starting this analysis, prepared with contributions and research from Yasar Atolye.
Yes, it was quite a busy week again. Let's see what these data tell us, what they mean for you. Let's evaluate together.
Let's start with global developments. Currently, there are tariff negotiations happening behind the scenes between the US and the European Union. It is said that positive signals have been exchanged between President Trump and von der Leyen. This seems to have somewhat eased the markets.
Yes, that uncertainty seems to have decreased a bit.
Even the average tariff expectations have decreased from around 20% to about 17–18%. This is good news.
Of course.
On the other hand, at the Fed meeting next week, a rate cut is not expected this time, but pressure is increasing in the market for September.
Exactly. And of course, there's the famous debate. Is the dollar losing its strength? Central banks are constantly buying gold. This trend increased especially after the sanctions on Russia. There's also the issue of the US debt.
Look, this dollar debate isn't actually new. I mean, similar things existed in the 70s as well. Yes, central banks are turning to gold, that's true. US debts are also at concerning levels, but it's too early to say that the dollar's throne will collapse tomorrow. Think about it this way. The US's technological leadership and the presence of the biggest companies there.
There doesn't seem to be an alternative, does there? Euro, UN, BRICS currency, all problematic.
Exactly. I mean, there are still factors that keep the dollar strong. This is a long-term process, maybe lasting for decades. A sudden crash scenario for the markets currently seems unlikely. So, let's move on to the US markets. The S&P 500, Nasdaq, record after record. We had a target of 6,400 for the S&P 500, and we are almost there. Both tariff optimism and technology earnings reports have played a role in this.
The technology side especially seemed very strong, yes.
What caught my attention was Google's or Alphabet's balance sheet. Cloud computing revenues have increased by 31% thanks to artificial intelligence, and they have raised their investment plan from $75 billion to $85 billion.
Impressive figures. Of course, this naturally supports infrastructure providers like Nvidia.
Sure. But the Tesla side seems to have fallen a bit short of expectations. The stock price seems to be more based on future promises. What do you think? Autonomous driving, robots, etc.?
Absolutely. The Google example shows that artificial intelligence is an opportunity for these giants. Tesla, as you said, is a complete faith investment. If Musk realizes that vision, the potential is great. But the current situation is expensive and looks a bit challenging in the short term. Overall, although the US markets look good in the long term, given these record levels and the Fed meeting, it might be more prudent to wait a week before making new purchases.
Let's quickly look at American bonds. What's the situation there? Is it calmer?
Yes, the bond market is still on hold for now. All eyes are on the Federal Reserve decision on Wednesday and the signals Chairman Powell will give for September. Dove-like statements from members like Christopher Waller, meaning comments favoring rate cuts, are fueling expectations, but Powell will be the main determinant. The market isn't expecting a big shock, but the tone is certainly important.
Let's talk about the Turkish markets. Moody's upgraded, but Fitch passed. Both describe the outlook as stable.
Yes.
So basically, not much has changed in the big picture, right? It seems like Moody's has aligned the rating it previously downgraded more heavily with the others now.
Exactly. This is more of a technical correction, an alignment. Basically, the economy is still tough. So high inflation is affecting the public and companies are struggling. It's not just about interest rates. Old business models are also under pressure.
It seems that being an interest rate cut won't immediately reflect in the loans anyway.
Yes, when it comes to credit limits and such, that process takes some time. When looking at the stock market in dollar terms, It's not actually as cheap as it was when $265 was the only alternative in the past.
So short-term movements might happen, but you say we need to be cautious.
It's advisable to be cautious about the overall outlook, aside from speculative movements. The dollar, TL, and others are also affected by this macro outlook.
Let's move on to the metals. How is gold doing? It is hovering around $3,130. There are geopolitical tensions and such, but the expected big jump hasn't come.
Yes, gold seems a bit tired after that last exit. Let's say it's consolidating.
The next target is said to be $3,568, but do you think there might be a pullback to $3,250 first?
It could be, yes. The recent cycle of gold seems to have been somewhat disrupted. A rest period might occur. You can hold what you have, but for new purchases, it might be more sensible to wait around $3,250. But right now, I think silver is more attractive. It dropped sharply on Friday, but both historically, when we look at inflation, and according to the gold-silver ratio, it appears to have higher potential.
Which levels are spoken for silver?
The first target is $43, and in the long term, it seems possible to reach $71, adjusted for inflation.
So platinum, palladium?
Platinum has potential, but turned back from the critical 1,480 resistance level. It is riskier than silver. We need to wait. Palladium has very high potential, but is extremely volatile, meaning it fluctuates a lot. It's more of an expert's job.
I understand. So, in summary, silver is favored for new purchases. Maybe it can be started gradually. If there is gold, it is held. Otherwise, a decline is expected. Platinum and palladium are risky.
Exactly. That's the summary.
Let's look at the cryptocurrencies. Bitcoin and Ether paused a bit after the rise. Ether turned back from the $3,800 resistance.
Yes, there is a breather. I think the current positions can be maintained. We shouldn't rush into new entries. Maybe regular small purchases, called DCA. That strategy might be more sensible.
Is it better to wait for the Ether to exceed 3,800?
It would be safer, yes. We need to see a clear breakdown. Ripple looks weak below 3.38. We do not recommend new purchases at those levels right now.
Can the general trend last until September?
There is potential, but corrections are also part of the nature of this job. It should be accepted as normal.
So finally, the week's schedule. What do we have ahead?
The star of the week is Wednesday. The Fed interest rate decision and Chairman Powell's speech. More than the decision, Powell's statements and the nuances will be important. Inflation, growth, September signals. These will move the market.
We'll see whether it will be a hawk or a dove.
Exactly. And of course, news from the US-EU tariff negotiations should be monitored.
Yes, the markets seem to be swinging between tariff hopes and technological gains on one side, and economic concerns and the Fed's cautious stance on the other. We said silver might be an opportunity. US tech stocks are good for the long term, but maybe a pause in the short term.
Absolutely. Let me leave you with one last thought. We said these artificial intelligence investments are massive, with Google spending around $85 billion or so. But what could be the secondary effects? I mean, chip makers, cloud providers, okay, but besides this large construction push, who else? Which less visible sectors could benefit?
Interesting question. For example, the energy requirement of data centers.
It could be. Or other infrastructure providers. I think it's worth considering.
Great point. Let's leave it at that for this week then. See you next weekend. I wish you a profitable week.
See you soon. Have a good week.